Welcome back to the Malaysia Money Matters show. It's the 9th of October 25. Today, we're doing our deep dive, cutting through the noise to bring you the key facts and implications for the latest market news, both here and globally.
Absolutely. We've got quite a mix today. Some really interesting corporate moves, a big win for consumers, some serious talk on retirement savings, and, well, gold hitting record highs.
Right. Let's start with the corporate side, maybe property first. There seems to be a lot of international interest.
Yeah, definitely. Look at SP Setia. They're partnering with Japan's Mitsui Fudosan.
Oh, okay. What's the project?
It's a big one. RM 1.3 billion landed housing development out in Setia EcoHill Semenyih.
Landed housing and Mitsui Fudosan's involvement. That sounds significant.
It really is. This is actually their first time doing a landed housing project in Malaysia. So it's a massive boost for Setia EcoHill's profile, a real vote of confidence.
Interesting. And sticking with property, but moving towards tech and logistics. Matrix concepts.
Yes, they've signed an MOU with Golog Holdings. They're planning this huge China-Malaysia Air Silk Road dual hub industrial park.
Wow, that sounds ambitious. Where's this?
In Negeri, Sembilan, part of the MVV Tech Valley, we're talking RM 8 billion over 618 acres. And the key thing here is Golog's tech platform AI, IoT. It's meant to make this a really high-value logistics hub, enhancing connectivity, basically.
So building future infrastructure, not just buildings.
Exactly. It's that high-tech angle again.
We're seeing that elsewhere too, right? Companies diversifying into higher tech areas.
We are. Take Pecca Group and Betamek. They just signed an MOU.
What are they doing together?
They're planning to jointly develop advanced entertainment systems, but get this, for aircraft and trains.
Aircraft and trains. So moving beyond cars.
Precisely. It's a strategic shift, tapping into the aviation and railway markets across Asia-Pacific. It's a smart diversification, looking for those high-growth segments.
Yeah, makes sense. And G8 Holdings is also making moves.
A dual strategy, actually. First, they want to expand into advanced printed circuit boards, the complex, multi-layer, high-density kind.
Okay, that's quite technical. High reliability stuff.
Yes, for industrial sectors. And second, they're launching a big property project in Penang, SA Central, worth about RM 1.2 billion.
So high-tech manufacturing and property development. How do those fit together?
Well, advanced PCB production needs serious capital. It seems like they're leveraging the property side, maybe for steady revenue, to fund that leap into the high-tech industrial components. It's balancing the portfolio.
Right, managing risk and investment. Okay, let's quickly touch on corporate finance and governance. Tropicana Corporation.
Still focused on debt reduction. They just redeemed another RM 139 million sukuk tranche.
So they're consistently paying down debt.
Yeah, their total payments under this specific program are now over RM 1.1 billion. It shows financial discipline, trying to lower that gearing ratio, important for investor confidence.
Definitely. And on the less positive side of governance, at-T systematization.
Yes. Serious charges there. A former director is facing 41 charges.
41? Over what?
Alleged illegal transfer of funds, about RM 16.35 million, apparently causing wrongful loss to the company. The Securities Commission is clearly not messing around with enforcement.
No kidding. Okay, shifting gears to something directly impacting consumers, the Hire Purchase Act.
Oh, this is huge news. Parliament approved the amendment bill.
And the big change is?
They're abolishing the rule of 78 for fixed-rate hire purchase loans.
Finally, that flat rate calculation was, well, not great for consumers settling early.
Not at all. It front-loaded the interest, so early settlement saved you very little. Now, with the effective interest rate and reducing balance method, you'll actually see real interest savings if you pay off your loans sooner. Much more transparent, much fairer, a big win.
A really positive step. But now, linking consumer finance to longer-term security, EPF reforms.
Yes, the government is seriously considering reforms, especially for those nearing or at retirement age. There's talk of a new two-component account structure.
Flexible savings and retirement income savings. Is that the idea?
Something like that, and the urgency is palpable. The stats are pretty worrying.
What are we looking at?
Well, only about 23.9% of members aged 18 to 55 have even met the basic savings threshold. And worse, over 42% of senior citizens are living in relative poverty.
Wow. So this isn't just tweaking the system, it's critical.
It's absolutely critical, a response to what looks like a looming national challenge.
Okay, let's broaden the view now international stage. The ASEAN Summit here in Malaysia. There are reports about U.S. President Trump's attendance.
Yes, quite specific conditions apparently being reported. His presence might hinge on him overseeing a peace deal signing between Cambodia and Thailand,
Okay.
and crucially excluding Chinese officials from the event.
That puts Malaysia in a tricky spot, doesn't it?
Incredibly tricky. You've got the U.S., potential trade implications like tariffs, but then China is Malaysia's biggest trading partner. It's a very, very delicate balancing act.
That geopolitical uncertainty, is that feeding into the markets? Gold, for instance.
Oh, absolutely. Gold just raced past U.S. $4,000 an ounce. First time ever.
$4,000. That's historic.
It is. It's a classic flight to safety. You've got the geopolitical tensions we just mentioned, plus expectations of U.S. interest rate cuts and the ongoing U.S. government shutdown fueling it.
And prominent investors are noticing.
Definitely. Ray Dalio publicly stated gold is certainly safer than the U.S. dollar right now. That tells you a lot about the level of global economic anxiety.
Wow. And central banks are reacting too. New Zealand.
Yes, the Reserve Bank of New Zealand just surprised everyone. They cut their benchmark rate quite aggressively.
Not much.
By 50 basis points down to 2.50%. That's a big move.
Why so drastic?
They seem really concerned about their economy looking frail. They basically signaled that even more easing might be needed to prop things up. A pretty strong signal.
So wrapping things up from today's deep dive, quite a picture. We see Malaysian companies looking outward, partnering globally, diversifying.
Yeah, real ambition there. But domestically, the big stories seem to be around, well, protection. A win for consumer protection with the Hire Purchase Act changes.
And this urgent, pressing need for reform when it comes to retirement security through the EPF.
Exactly. And connecting those two, Parliament managed to push through the hire purchase changes relatively quickly, addressing that transparency issue. Makes you wonder, doesn't it?
Wonder what?
Well, given that success, will the EPF reforms, which are arguably even more critical given the poverty stats, find a similarly smooth path? Or will the sheer complexity and maybe some resistance slow things down, prolonging the wait for better retirement security for so many Malaysians? Something to think about.
A very compelling question to end on. Make sure you subscribe to the Malaysia Money Matters podcast so you never miss another deep dive. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.